They say that two things in life are certain. One is death and the other is tax. However, really interestingly, if you manage to go to Turkey, over there, the government is saying that they will not tax you for about 20 years. Yes, that is correct. So Turkey has come up with an aggressive move, and that move is to say that you will be required to pay no taxes, absolutely no taxes whatsoever for 20 years. Now, why is Turkey doing this? It is doing this in order to attract top talent from around the world and to make Turkey basically a global hub of talent. First of all, they need the talent for their own country, its development, for its economy. At the same time, in future, maybe they want to be and they may be able to become a global talent hub, as a result of which they have come up with this aggressive move. So let us understand the further rationale behind this move, what is the detail about it, and who will be attracted to take this approach. Plus, we will also see, is there any negative externalities with respect to this move, so on and so forth. So let's get started with the news. So the news is about Erdogan's strategy. So Erdogan has come up with a strategy which is going to do what? As I said, attract the global talent as well as capital. Of course, when the talent is attracted, the capital will also be invested over here. So it has been announced by Recep Tayyip Erdogan, as is mentioned over here. It aims to position Turkey as a global investment hub. Now, we are talking about tax cuts, or let's say no tax for you if you are working there, income is not taxed. Because of that, the employees can be at cheap. At the same time, it will attract more competition, more talent over there, resulting into more investments either directly or indirectly. So FDI will also increase. Right, what is the context? The context is the rising global economic uncertainty. Now, since there is a very high uncertainty, every country wants to attract more talent, every country wants to attract more investment, so that it is economically powerful and does not have to, it will still be connected with the world but will not have much of the shocks due to global uncertainties. So that is the news all about. Now, this should be 20 actually. Yes. So what are the key features? Let us have a look at it. So there is 20-year tax holiday. For whom? For foreign nationals. So we Indians, of course, will be foreign nationals for Turkey. Now remember, Indians are also increasingly migrating out of countries. In fact, giving away their citizenship as well. So here, as such, you don't have to give away your citizenship, but of course this will attract people from around the globe, including Indians may also be attracted over here. So let us understand what is the eligibility. Now the eligibility, the very first is not a Turkish tax resident for the past 3 years. That means you cannot be a Turkish tax resident. That means residing in Turkey and paying taxes. If you have been doing that, you will not be under this particular scheme because you are already in Turkey, already paying tax. So the idea is, you may feel a little let down, but the idea is you already chose to be there without these incentives also. So that is all right. They want to attract further talent. That is why they are giving the scheme. So if you are a Turkish tax resident for the past 3 years, if you are a Turkish tax resident, you will not be eligible. So you have to not be a Turkish tax resident for the past 3 years, plus must relocate to Turkey. Right, you have to relocate to Turkey. It is not that you are working from here and catering to the Turkish population. No, that is not going to work. Now, what is the benefit? The benefit is zero tax on what? On the overseas income that is generated, on the capital gains abroad as well. What are capital gains? Whenever you buy a capital asset, let's say today you buy a capital asset, after 5 years you want to sell that capital asset. So the difference between the amount at which you are selling and the amount at which you bought is basically the capital gains. So that capital gains is also taxed. So there you will get again tax rebate, no taxes, and only domestic income tax will be there. So a lot of profit will come to your way. Now let us look at the additional personal tax benefits that is there. So basically, favorable wealth transfer regime. Why favorable wealth transfer regime? Because there is only 1% inheritance tax and gift tax. What is this inheritance tax and gift tax? When a person inherits certain property or wealth from their predecessors, from their forefathers, grandfather, father, that is also taxed. So there will be a flat only 1% inheritance tax or gift tax when someone is gifting the things to you. Now this is much lower than the global averages that are there. So this particular approach is trying to target what? High net worth individuals as well as the global professionals that are there. So those who are high net worth individuals, that means their net worth is quite high, they are the ones who are targeted. They can gift it to their children, spouses, etc., or transfer, or it gets transferred after their death or through the will, whatever. So inheritance tax and wealth tax is inheritance tax and the gift tax is a flat 1%. Now let us look at the corporate tax reforms that they are talking about. So here there will be major rate reductions in the corporate tax. So with respect to the manufacturing exporters, the tax will be reduced from 25% to a mere 9%. For other exporters also it is going to be reduced, but not to 9 but to 14, which itself is quite a big reduction. What is the objective of this? To boost the exports and to enhance competitiveness. How will the competitiveness be enhanced over here? Because then more people would be looking to invest, to start their business, expand their business, thus more competition would be there, right? Now, what are the incentives for transit trade? There is near zero taxation regime. So Istanbul Finance Center, like we have in India, the gift city, in the same manner is in Istanbul Finance Center, 100% income exemption will be there. That means zero tax will be there. However, outside this district, 95% of profit exemption will be there. But that means 95% of your profit will be exempted from any kind of tax. So this is zero tax and this is near zero tax that is there. The focus here is on the global trade and logistic firms, which will be targeted with this incentives. Now let us understand the institutional and administrative reforms that they are bringing to implement this. So the very first thing that they're doing about is, of course, the ease of doing business measure is what they are taking. They are coming up with a single window investment bureau. So single window investment bureau means it is, log on to one portal. In the same window, in one place only, you can fill all the formalities. You don't have to go to multiple websites, multiple web pages, multiple windows. Single window is going to be more than enough. That window, single window, is basically only one form, one website, one portal, or one physical window or physical institution. The branches can be many, but you just go to one place or log on to one place and the work is done, right? So there will be single window investment bureau for all the important things like company registration, work permits, tax filings, digital platform integration, so on and so forth. The idea is to liberalize the things, make the things easier, reduce bureaucratic friction if it is there, as well as improve the investor experience. Now, what is the strategic vision of Turkey with the help of this? It is to make Turkey a global hub, right? They want to shift it from bridge between east and west, right? Just bridge between, so they are shifting from bridge between east and west to the central global hub. They don't want to be just a bridge between the east and the west. They themselves want to be a global hub. Now, what are the key strengths they have in order to do that? The strategic location of Turkey, which connects Asia and Europe, the energy trade corridors that passes, and the development infrastructure that they have, competing with, however, they are still competing with Dubai. Dubai already has zero taxes, right? Whereas London is also a very traffic city with huge traffic for investment as such. Let's move ahead. Let's look at the implications and analysis. The implications, the potential benefit is what? Increased FDI. As I mentioned, talent would migrate because you have to migrate in order to get this benefit. It will boost the export and financial services. However, there are still concerns. As I told, we will have a look at that. Concerns are related to the tax competition. Race to the bottom. Race to the bottom means from 25% you are lowering it to 9%, you are reducing it. After that what? Zero. After that what? Will you start giving money to people? So it's a race to the bottom, which is sort of that it will be a terminal end. Beyond that you cannot go. So it will not give much room to the government and to the country to play with in the future. That is the issue here. Revenue loss will be there in the short term. In the long term, because of increased production, you may gain a lot, but in the short term revenue loss will be there, and there will be dependence on foreign capital, not your own capital, but the foreign capital, foreign mind, and the fact that people are willing to migrate, right? So these are the concerns, but still looks like a quite promising prospect for the people around the world. Thank you.